Previously on Insurance Dudes podcast.
This is important. Write this down. Dialing specialists are sifters. Now, we want to give our sales folks tons of opportunities where the focus is not on the sales, but the focus is on the activity. And then the activity needs to be handed to the right person. We have a dial, we have a contact if it gets answered, we have a transfer, and then we have a quote, and then hopefully a sale.
Insurance dudes are on a mission to escape being handcuffed by our agencies.
How? By uncovering the secrets to creating a predictable, consistent, and profitable agency sales machine.
I am Craig Pretzinger.
I am Jason Feldman.
We are agents.
We are Insurance Dudes.
How does technology integrate with human touch in this system? It's an interesting one that you chose. Okay. Well, I could think back to 2009 when it was actually December of 2008. I took over early. My actual official start date was April 1st, but this guy was going to run it into the ground and he bounced. So he left. So I came in, ran it under his name until the date, and then, pressed onward in kind of a mess. And back then, 2008, 2009, we're making the dials by hand. We didn't have the phone where you put it up to your ear. Hey, flap, we weren't doing that. But we did have push button phones, which we don't even have in our office anymore. And we were actually dialing each dial. So tech has come a long way since then, right? And we incorporated our carriers' technology for sending out text messages. So it's an approved fashion. And you want to make sure with text messages that you follow whatever the rules are. With everything, you want to follow the rules. But with text, this is how you can get in a lot of trouble. So you want to make sure whatever the mandate is on text, you've got to follow it. And you got to make sure, I would even say, if the mandate from your company is X, I would look at TCPA and make sure that it aligns with that. Because at the end of the day, when they come after everybody, they're coming after everybody. And so we got to make sure that that doesn't happen, right? So that's being smart and keeping yourself safe there. So just do the right stuff. Tracking and measuring. So a lot of the systems now actually output the important data, and we need to use whatever technology we can to track and measure. So if it turns out that you have a different reporting system that won't tell you cost per sale, lifetime value, these are things we need to do. There is somewhere on the website a lifetime value calculator. So if you do want to figure out what your lifetime value is, all you need to know is your retention, how much you want to write, your new business comp, and then your renewal comp, and it'll spit it out, tell you. My rule of thumb for lifetime value is take the premium that you wrote, cut it in half, and subtract a little bit. That's a rule of thumb. You're not running your business off that, but for a quick decision, that's going to tell your lifetime value if you're around an 80% retention. So keep that in mind. It's about half of what the new business premium is, at least with my carrier, based off of the new business, VC, and the renewal. So you could certainly need to do this for your own state, figure it out, but that's the quick and dirty. So tech is really good for making the activity happen, tracking the activity, and like looking for opportunities to automate. So anything that seems repetitive, a lot of it now, especially if it's not client facing, if you have internal processes that require people to do spreadsheets or track things, a lot of that can be automated away now. And we'll touch on those types of things that can help with that down the road here. Moving on, why don't we jump into the next question? And then I think we'll do a wrap after that question because it got pretty good here. Yep.